Hi Mortgage Heroes, Andy Cruz here in Business Development, and this is Monday Mortgage Minute. Welcome back to a brand new week. This week is a big one again. Yes, a big one again. It's a jam-packed week with a lot of economic news, and of course we have the Fed right before Christmas and New Year's. Before we talk about this week though, we have to pay a visit to last week real quick. Remember last week I said the only important thing happening was the PPI report coming out on Friday? Well, Friday was interesting because it came out higher than expected, and as we've been discussing, everything that has higher expenses on the producer side eventually makes for higher expenses on the consumer side. And that's not necessarily a good sign because guess what we have this week coming up? The Consumer Price Index. And that arrives on our doorstep on Tuesday. On Tuesday morning, we're going to get the CPI monthly reading, the yearly reading, and we're going to get the CORE CPI number. All of these, of course, are a reflection on the consumer side of what costs to make things are on the producer side. And last week, we got a little bit surprised with that PPI number coming in higher than expected. Does that mean that this week on Tuesday, we're going to see the CPI numbers higher than expected? Probably, most likely we will. It would be a really big surprise if it came in lower than expected, especially because of last week's PPI reading. But that's not even the most important thing happening this week. You all know that Wednesday is the most important thing happening this week. That's the Fed rate hike decision and their press conference to talk about all the things they're looking at, or at least the things they want to tell us they're looking at. So we have an idea and a sense of where they're going, how long it's going to take them to get there, and why they're making some of these choices. Wednesday is most likely the big doozy for the week, of course, because it's the Fed talking. It's going to be Jerome Powell not only giving a press conference, but also addressing the media and their questions. We're going to have to watch really closely to see how that plays out. And in fact, this week, that is going to be the core emphasis of our weekly podcast that Memo and I do every single week. We're going to talk about what the Fed said, why we think they said it, and what that means for 2023. Now, that does not end the economic week, of course, because why would it? Thursday, we have retail sales numbers coming out, which of course is a great reflection on how the consumer feels about the economy and how much money is being spent. Most recently, there was a recent sales record broken for the most amount sold online during Black Friday, and a lot of the sentiment was because it was just the cost of the prices of the goods going up, not necessarily that people bought more items. A lot of the early indication is that the retail sales numbers have a lot to do with prices remaining inflated rather than people buying more things. And then on Friday, we get the flash PMI, which of course is the manufacturing index, and we're gonna see what the manufacturing orders look like coming up for the next quarter, and that's gonna give us some indication on some behind the scenes things that are working, but really, overshadowing everything this week is going to be that Fed rate hike decision and the Fed's policy statement, press conference, and Q&A session. So what does this mean for mortgage rates this week? Well, everyone in the mortgage space is waiting on the Fed's decision on Wednesday. It's going to either confirm all the suspicions and assumptions, it's going to conflict with those assumptions, and really there's no other option. At this point, everyone is doubling down that the Fed's going to have a 50 basis point rate hike, which is 0.5%, which is what we're expecting. They've already given forward guidance that they're going to have to do rate hikes into 2023 for a little bit longer than they thought, and that their terminal rate would be higher than initially expected. That means the rate at which they stopped doing rate hikes. It's likely that after this 50 basis point hike we see on Wednesday, we'll see incremental 25 basis point hikes, maybe 1, 2, or possibly 3 times into 2023. A lot of the December data, and then in January, the data that reflects December is going to indicate whether or not they have to do 3 more incremental rate hikes at 25 basis points, or only 2, or maybe even just 1. We'll see, because all of this is to fight inflation. And last week we talked about how not all things inflation related can be squashed with policy. If you missed that Monday Mortgage Minute where I talked about railroad strike and I talked about ships going across the sea, go ahead and check that one out and you can see what I'm talking about. Quickly moving back to mortgage rates. If it looks like the Fed is actually winning the fight against inflation, then you might see mortgage pressure ease a little bit, rates dip down a little bit lower, but it's also likely that you're going to see them stay exactly where they are. A lot of people were kind of front running this information that the Fed is going to have to come in with 50 basis points weeks ago. So that means for the last several weeks, the market has already been trying to shuffle and position themselves for what they're looking to have confirmed on Wednesday. If there's a surprise and the Fed has to come out super aggressive because they are dissatisfied with the effect that their monetary policy has had on inflation, then that could mean more demand destruction on the horizon, and that would be bad for rates. That would make rates go a little bit higher right away. This is all going to come down to what Jerome Powell says, what he states as the reason why he's saying it, and their sentiment about what they think is happening down the road. It has become painfully obvious to me that the Fed is just darned if they do and darned if they don't. If they try to fight inflation with everything they got, it's going to create some demand destruction on one hand, and if they don't fight inflation hard enough, then it's going to have more stickiness in more parts of the economy for longer. As you can see, there's really no clear, obvious out to all this, and both of them look like they're bad options. The question is, which one's worse? I don't really know the answer to that, but I do know we're living through them trying to figure it out. So for the mortgage side of things, banks are making risk analysis left and right now. Some banks are trimming people, some banks are trimming products, some people are creating new products, and they're all jockeying for position on where to take themselves in 2023, 2024 based on what they're seeing, based on what they're hearing, based on what the market sentiment is, and what they see the consumer appetite for mortgage lending is. So you're gonna see a lot of this happen over the next couple of months, and I'd say even quarters, as banks reposition themselves and they assess where they want to be from a risk position, not just from a marketing position. So keep your head on a swivel for 2023, especially if you have a pending move. If your circumstances are such that you have a job change, maybe you're PCSing to San Diego, PCSing out of San Diego, or a lifestyle change that is requiring you to move, make sure you are asking questions in advance, you're preparing yourself, and you're having clear communication with your loan officer and their team to best prepare yourself for the move you have on the horizon. And that's all we have this week. On Wednesday, we're going to come back and do a little bit more of an in-depth conversation regarding the Fed's comment and their rate hike, and kind of unpack some of the verbiage they use, the terminology they use, and some of the things they're commenting on to give you a better sense of what is going to likely happen in 2023. And just like that, this episode is over. Thank you so much for watching again. Please share this video, send it to someone you know, love, and trust. Help them win in mortgage real estate in 2023. And if you need help, make sure you write a comment, send us a DM, give your loan officer a call, a text, or an email. Tell us what situation you might be facing so we can help put you in a position to win in the new year. Thank you so much for watching, and we'll see you again next week.